Assalamualaikum and hi everyone. So we are from Group B. We will be presenting about purchase cycle, and my name is Syami Shaukina Balkis binti Nurjadidan, and my group member is Muhammad Haziq bin Muhammad Fazlin, Azizul Hakim bin Muhammad Noor, and also Atirah Natasha binti Suzaimi. So moving on to the first slide, which is process. There are a lot of process in purchase cycle. There are 7 processes that we have found, which is first requisitioning, purchasing, receiving, invoice processing, disbursement, account payable, and general ledger. So moving on to the next topic, which is sources. There are a lot of sources that we can found that relate to purchase cycle, which is such as purchasing requisition, purchase order, receiving report, vendor invoice, voucher, and etc. So moving on to the next slide, which is type of transaction and its account affected. So we have listed 3 types of transaction, and there are many more, but we only list 3 type of transaction, such as purchase transaction, cash disbursement transaction, purchase return transaction, and you guys can read by yourself the account affected by the type of transaction based on type of transaction, such as, okay, I'll read one for you guys. Purchase transaction and its account affected is account payable, inventory, purchase, COGS, and various asset and expense account. So moving on to the next slide, which is journal entries. There are different type of journal entry for different transaction, and this is journal entry for purchase transaction, and the second one is for this slide is for journal entry for cash disbursement transaction, and the third one, journal entry for purchase return transaction. And usually all these kind of journal entry that I've shown you, this is the common journal entry that we can found in each type of transaction. So moving on to the flow chart. The next slide, which is flow chart. There are 6 departments in purchase cycle, which is purchasing department, IT department, receiving department, account payable department, IT department again, and cashiers department. So first they will start from purchase department. Purchase department will purchase requisition from other department, and they will approve the purchase requisition received. They also will file numerically the purchase order, and then in IT department, if there is any error, they will send back the report to purchasing department, the purchase order to purchasing department, and then if the purchase order does not have any error, they will make 4 copies of purchase order and distribute it to vendor, account payable department, receiving department, and also purchasing department. And the third department is receiving department. From in receiving department, they will purchase the order and they will count it and inspect the goods received, and they will make a receiving report and will enter the vendor quantity and purchase order number into the daily receiving log. So the fourth department is account payable department, which from the receiving report, they will review account distribution. And next they will, in IT department, the IT department will do account payable reporting and also cash disbursement report. And if they found any error in the report, they will send the account payable update to the account payable department so that they can make any error correction. And the last department which is cases department, which in this department they review, check, and EFT listing. So that's all from me. Next, I'll pass the presentation to my friend.
Okay, for the internal control. First, controlling the environment. Basis of other element of all other components of the internal control system. Second, risk assessment. Management determine risk controlling means after examining the risk related to every objective. Evaluate risk on a regular basis as changes in organization such as staffing, new policies, new software application. Third, control activities, policies and procedures that help ensure that management directives are carried out. Fourth, information and communication. Relevant information for taking decisions are to be collected and reported in proper time. The events that yield data may originate from internal or external sources. Fifth, and the last one, monitoring. The organization monitors its effectiveness so that necessary changes can be brought if any serious problem arise.
Okay, Assalamualaikum warahmatullahi wabarakatuh. My name is Azizul Hakim bin Muhammad Noor. My matric number is 1978559. Okay, today I want to present about risk area. So, audit risk is the risk that an auditor issues an incorrect opinion on the financial statements. For example, is issuing an unqualified audit report where a qualification is reasonably justified, and the other one is issuing a qualified audit opinion where no qualification is necessary. Okay, for the first element of risk is control risk, and there is three major steps in setting the control risk. This first one is understand and document internal control. Second one is plan and perform test of control, and the third one is set and document control risk. The first step is understand and document internal control. So the auditor need to understand the 5 components of internal control system. Okay, which is controlling the environment, risk assessment, control activities, information and communication, and the last one is monitoring. And the second step is plan and perform test of controls. So the auditor needs to analyze the purchasing process to identify controls to determine that material misstatements are prevented or detected and correct the misstatement. And it is also necessary to verify that this control is operating effectively. Okay, and next is set and document control risk. So the auditor sets the achieved level of the control risk after the control are tested, and there's no modifications are normally necessary to plan level of detection risk when test of controls support the planned level of control risk. So the auditor must set a higher level of control risk when test of controls do not support the planned level of control risk. So for the second element of risk is inherent risk. For the first step is industry related factor. So the company need to check either the supply of raw material adequate. There will be a problem if company only have few supplier in purchasing cycle. Okay, when one supplier goes down, the company have other supplier to approach when they have many of supplier. So they need to consider how volatile our raw material price also. So there will be reduce some error if the price stable. Okay, the second inherent risk is misstatement found in prior audit. Purchasing processes not difficult to audit and does not present contentious accounting issue, and company would not be often to expect that have audit problem. So that's all from me. Thank you very much.
So I'll be explaining about important assertion for audit procedure in purchase cycle. The first assertion, which is occurrence, and the possible misstatement is purchase has been recorded, but there are goods and services not ordered or received. So this example test of control, the test of sample voucher for the present of an authorization purchase. Purchase not recorded without approved purchase order receiving report. Cash disbursement recorded but not made. Bank authorization prepared and reviewed regularly. Next is completeness. The purchase has been made but not recorded. So the control activity is receiving report matched to vendor, invoice, and entered in the purchase journal. For the cash disbursement, made but not recorded too. The daily cash disbursement reconciled to posting account payable subsidiary records. Next is authorization. The purchase of goods or services not authorized, so it will be approved purchase, requisition, and purchase order. The cash disbursement also is not authorized. Electronic fund transfer and checks prepared only after all source documents have been independently approved. Next is accuracy. The vendor invoice improperly priced for incorrectly calculated. So the purchase order agreed to receiving report and vendor's invoice. The cash disbursement also not properly posted to cash disbursement journals, account payable, subsidiary records to the general ledger. The cash disbursement report reconciled with posting to cash disbursement journal and account payable subsidiary. Next is cut off. The purchase transaction recorded in the wrong period, and then all the receiving report forwarded to the account payable department daily, and it will compare the dates of receiving report with the dates of the relevant vouchers. The cash disbursement period in the wrong period. Reconciliation of EFT and check issued with posting to the cash disbursement journal and account payable subsidiary records. Review reconciliation. And last but not least is classification. The purchase transaction is not properly classified, and the charts of accounts, review purchase journal and general ledger for the reasonableness. The cash disbursement changed to the wrong account too. The charts of accounts and the review cash disbursement journal for reasonableness of the distribution.
Okay, case 2, which is purchase case. Okay, this is the question for our purchase case. You can read by yourself. Okay, for the question 1 is explain why the internal control procedure as they apply individually to receiving reports and the receipt of sheet metal, screws, and camera lenses are inadequate or inadequate. Do not discuss recommendation for improvement. Second, what financial statement distortion may arise because of the inadequacy in Duba's system of internal control, and how may they occur? Okay, the answer for question 1 is the internal control procedure as they apply individually to receiving reports and the receipt of sheet metal, screws, and camera lenses is inadequate. Second, the procedure inadequate because missing of physical audit. Third, the Dubai camera manufacturer did not apply the reconciliation. And the last one is the company also not apply trial balance in the internal procedure. Okay, this is the answer for the question 2, error and omission. Errors in financial statement always occur when there is no internal control. Account balance may not balance back to balance statement or supporting schedule. Internal control is so important to reduce the risk of material misstatement. Second, misappropriation of the asset. Segregation of duty enhance internal control, improve the accuracy of financial statement. Internal control reduce internal and external threat to asset and cash account to manageable level. Okay, third, material weakness. Material misstatement in the entity's financial statement, an ineffective control environment. And the last one is failures in the operation of internal control. Deficiencies in timeliness, completeness, or accuracy can lead to failure of the information and communication component of internal control. That's all from us. Thank you.